Coming up, financial complaints hit a record, and we take a look at the latest supermarket sales numbers and US corporate reporting season. That's all next. Here's your daily 10-minute business and finance news wrap for this Thursday, the 31st of October 2024. The Australian share market fell today by around 0.25%. We'll have the details, including the opportunities for investors in this kind of an environment, with Scott Phillips from the Motley Fool. But first, to financial complaints, which have hit a record. The Australian Financial Complaints Authority says it received almost 105,000 complaints last financial year. That is an increase of 8%. For more, Rhayna Bosch spoke with Justin Untersteiner, the Chief Operating Officer at AFCA.
Yeah, there's really three really concerning trends that are worrying us the most, and we're engaging very heavily with the sector on. The first is this surge in scam-related complaints. Scams are such a problem in the community at the moment. I think most people will know someone that has been impacted by a scam, and we see the harm and stress that it causes consumers. It's really devastating for individuals and for families. So we received almost 11,000 disputes about scams, which was 1 in 10 complaints. We also saw a continued trend of high number of complaints against general insurers. But one of those shifts there is a really large increase in complaints about comprehensive motor vehicle insurance, and particularly delays in processing claims about motor vehicles. And the third and another really worrying trend was an 18% increase in complaints about hardship. And what that really means is it's where a consumer or a customer is in some kind of financial difficulty. They're struggling to pay their bills, for instance, or they're struggling to have enough money to pay for their insurance policy. They reach out to that firm to try and seek support, and they just don't get the support they need. We don't think that's good enough. We're expecting the industry to engage in a proactive way with those customers and in a tailored way that suits those customers, because we know that there are a lot of people in Australia doing it really tough at the moment because of interest rates, because of cost of groceries. So it's really critical that people get support early.
Justin, I want to touch on that scam point first. You did mention quite a dramatic increase. That kind of contradicts what the National Anti-Scam Centre says they've seen. How do you consolidate the two?
Yeah, well, AFCA's a lag indicator in that, we're sort of at the end of the line. Like, people come to us at the very end when they're desperate to try and seek compensation. And so, we're a bit of a lag indicator. In saying that, we did for the very first time in years towards the end of the last financial year start to see a decrease, and that's continued this year. So that's a positive sign. In saying that, we're still seeing far too many complaints about scams. We're seeing far too many Australians who are dealing with the stress and the trauma of scams. And what we want to see is two things. We want to see the industry do a lot more to protect consumers from scams, remembering that we're really being forced into a digital environment. Yes, there are lots of benefits that come with that. I bank digitally, but we're seeing branch closures, we're seeing ATM closures. So people are really being forced to bank digitally. And so there's an onus on the industry to protect our money. The second thing we want to see is where there has been a scam take place, we want to see the banks and others engage quicker and more effectively with their customers. What we know is 67% of those 11,000 disputes that came to us about scams, when we took it straight back to the bank, it got resolved immediately. Right? That should have been resolved before it came to us. So we're expecting the industry to be much more proactive in supporting consumers when they have been scammed.
You've talked a bit about the sectors behind these disputes, banks and general insurance. How about the types of products that people are complaining about?
Because of scams, we're seeing a lot of disputes around transaction accounts. And again, that's where money is left your everyday banking account, really, because of a scam. So the number one product or issue is transaction accounts. We're seeing credit cards, and part of that's for the similar reason of scams as well. But then again, we're seeing issues because of insurance. So claim delays is an issue. We're also seeing disputes around claim amounts in insurance as well. I guess another area that we keep an eye on, it might not be appearing right in the top of our list at the moment, but I think it's something that we need to be mindful of, is buy now, pay later as well. At the moment, under the current laws, buy now, pay later firms aren't required to be a member of ours, but some voluntarily are. We've seen gradual increases in complaints against buy now, pay later providers. I think one of the concerns that we have there is in the current economic climate, people are really struggling. They are looking for different forms of credit. People are turning to buy now, pay later. It is often advertised as a zero interest or low interest product. But what's not often understood is that if you fall behind, there can be really large fees that come with that. And we've seen examples where if you turn that into an interest rate, it'd be comparable to 50 or 60%. And so we did welcome the government's announcement to introduce better protections for buy now, pay later. I think that's really, really important. That hasn't passed yet, but we're hoping to see that soon. So that's just another area that we're certainly watching closely.
Speaking to your scope and legislation, there have been suggestions put forward that AFCA's scope could expand to include telecommunications services. What's your take on that?
Yeah, so the government has announced their intention to introduce new legislation called the Scams Protection Framework, which would be accompanied by mandatory industry codes. Those codes would represent the banking sector, the telecommunication sector, but also digital platforms. So that includes your Facebooks and your Instagrams and your social media platforms, because sometimes that's where we see scams really start, some kind of false advertising on social media. The intention of the legislation, which, by the way, we do welcome the legislation, we think it's a really positive step forward, is to set a much higher bar for those three sectors in terms of what is expected that they are to do to prevent scams. So it's looking at the whole ecosystem. And then if things go wrong, really clear liability and penalties too. Part of that, it has been proposed that AFCA, our organisation, would be able to accept complaints against a bank, a telecommunication company or digital platform. At the moment, we could only deal with banks in a scam arrangement. And so we can look at that holistically. Again, we welcome that. I think AFCA has got a really strong record of delivering outcomes in external dispute resolution, ombudsman services. And in fact, we only opened in 2018. And since 2018, we've now resolved almost 500,000 disputes and awarded almost $1.5 billion back to consumers that they wouldn't have otherwise received if they hadn't have come to us. So we certainly welcome that. But at the end of the day, that's a decision for the government. It's a decision for Parliament. But I think where we come at this from is we want to see better protection in the system, because at the moment there just isn't very strong regulation or law or standards when it comes to dealing with scams in Australia.
That is Justin Untersteiner from the Australian Financial Complaints Authority.
Now, Market Day on the SBS On The Money podcast.
With the US election looming, the Australian share market fell, but only slightly, 0.25% on the S&P ASX 200. So that's down about 20 points to 8,160. With the details, I spoke with Scott Phillips, the Chief Investment Officer at the Motley Fool.
Ricardo, it's been very much a global story. We know the presidential election is weighing very, very heavily on global capital markets. As much as we want to believe it's about retail sales and about the retailers themselves, it comes down, unfortunately, and maybe not, for the next couple of days at least, it's all going to be about the US.
Yeah, so we even saw that overnight. The US economy data there, GDP expanding by 2.8% annualized. That's just ahead of the election, the 10th consecutive quarterly growth. How do you see the economy playing out given the rate cuts and the implications of the election?
Mate, I've got to say, the rate cuts seem to have been, if not unnecessary, certainly not burning platform stuff, given the US economy is still so incredibly strong at 2.8%. It can always be stronger, of course, but as we know well, we've got to be careful what we wish for. Too much growth sows the seeds of the next collapse. But at 2.8%, as you say, the 10th quarter in a row, the US economy is in ruddy good health. And that is great news for them. It's great news for us. We know if the US sneezes, Australia catches a cold. It's a horrible cliche, and yet it's important. The equity market's pretty happy with those sort of numbers as well. Overall, the continuation is positive. It does, though, call into question how much further the US Fed may have to or may choose to cut in the months ahead.
The other thing with the US is that we're in the midst of corporate reporting season. The Magnificent Seven, those huge tech stocks, the one I think a lot of people are looking at. We saw Alphabet, Google's owner, post some numbers overnight. Revenue numbers beat expectations. So what does this say about all that AI and tech hype that's out there?
There is so much tech hype, and probably, frankly, for pretty good reasons. We've looked at the valuations before and we said, gee, that looks expensive. The Magnificent Seven, responsible for almost all of the growth of the US stock market when you break down the value contributions. And yet the growth continues to be very strong on the top and bottom line. AI is going to continue to be huge, mate. The computing power that's going to be required. If anyone's used AI, they know how useful it can be, and frankly, is going to continue to be over the years to come. I'd be very careful about underestimating the growth of tech in general and US tech in particular. AI is going to be the pointiest bit of it, and be careful of getting over exuberant. We may well end up with share prices that are too high, but the underlying technology and the changes it's bringing to the workplace and to society in general, I'm pretty sure have a long way to run.
One of the key stories today in Australia has been that of Coles following numbers from Woolworths yesterday. So if we can run through some of those numbers, Coles says supermarket sales have grown 3.5% in the September quarter. That's below Woolies yesterday at 3.8%. But unlike Woolies, where average prices there actually went backwards, they rose 1.5% in Coles. Still, what I want to ask you is about what Coles is saying or how it's coping with the inflationary environment. What does it say about consumers? And then how does it play out to this notion, this political notion, these questions that supermarkets like Coles and Woolies, that they are profiteering?
I think it puts to the sword that very idea of profiteering, to be honest. I mean, if they're trying to price gouge, they're doing a terrible job of it because the numbers simply aren't coming through. I will say, comparing Coles and Woolies, you do see the difference in the results of those different pricing strategies. Woolies has gone and sharpened the pencil. That's given higher sales growth, but average prices have declined. Coles have been more circumspect on discounting and have had lower sales growth as a result. Both together, they'll highlight the challenge for retail in general, even supermarket retail. This is staple stuff. This is not discretionary. And yet, as Woolies said yesterday, we're voting with our feet, we're voting with our wallets, we're going to other places, we're trading down, we're buying more of the specials and less of the full price product. So this is the very clear impact of the cost of living crisis over the past couple of years. But it also shows, I think, beyond, frankly, a shadow of a doubt, despite what as you suggest, the politicians might like to tell us, there is no price gouging of any sort. Maybe the discounting claims will be found to have been improper, and if so, the ACCC will throw the book at them. And frankly, if they are proven to be true, absolutely justified. However, that is very, very different from whether or not they're profiteering. There is simply zero evidence. There has been for ages, not much evidence at all. Today, I think, and yesterday, really does show very clearly that shelf prices are going up, but the supermarkets are not making out like bandits as a result.
Okay, finally, where do you see the opportunities for investors?
So the interesting thing about the retail numbers of the last couple of days is growth in online, 20% plus for online sales growth for both Woolies and Coles in an environment, as you say, where total sales grew less than 4%. Now, investors should really be paying attention to that one because we haven't talked about it for a while. Online sales and the move to e-commerce continues apace. We've seen Mosaic go broke. We've seen Premier Investments sell 700 stores to Myer. I dare say they're getting the best deal. I'd be looking very closely at those retailers who are doing the best job in online. They are likely, I think, to be the long-term winners.
That is Scott Phillips there from the Motley Fool. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.